Insurance agents from around the world, welcome to the Insurance Guys podcast, powered by Outmarket AI. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama. Parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome my friend, Mr. Bradley Flowers. How are you, Bradley?
I'm very good. So, you know how, so I'm a little bit self-conscious about this, and I'm just running into the storm, okay? So, you know, I was out on paternity leave for the whole month of June, and I got a little bored some, so I had to do something with my hands. So you remember how you had me try the closet wine?
Yeah.
So I have started procuring, and you're going to make fun of me, I know, procuring and roasting my own coffee beans.
Seriously?
And making my own coffee.
Cool.
And it would be my honor. I'm so embarrassed. It would be my honor if you're the first person to try it.
Please.
All right. So this is we need a good.
Now you're being serious. You're
Yeah,
giving me something.
It's not got X-Lax in it or anything.
Okay.
Let's cheers.
Cheers.
You're the first person to try. Laurel hadn't even had it.
All right. Let's see.
So I want you to be honest with me.
I will. Smells delicious.
Mm-hmm. It does.
Yeah, it tastes fantastic.
You don't have to lie. I know it tastes terrible.
No, it doesn't. It tastes good. I like it. I really do. Why? What are you laughing about?
I didn't make that. It tastes awful.
Oh.
Let the record show that Scott doesn't have a good palate for coffee.
No, I think it tastes fine. I was just afraid it was going to be something with like THC or something in it you're giving me. Is it really your own coffee beans?
No.
Oh.
So it's Buffalo Trace coffee. And I bought it.
It's not bad.
I bought it and I tried one K-cup and I was like, this is the worst coffee I've ever had in my entire life. So I brought it up here and Cole has been getting into bourbon and he likes coffee. And I said, hey, I bought this Buffalo Trace. It's like bourbon infused coffee. There's no alcohol in it.
I could taste something.
I was like, if you want to try this. So he the other day he tried it and he said, Bradley, this is the worst coffee I've ever had.
It's got a little wang to it. I'll give you that.
We have got to give this to Scott on the podcast.
Well, you did.
As a joke.
You did.
Anyway.
It's got a little wang to it.
It's got a different taste. I don't like it. It's not. But I'm not big on I'm not big on like flavored infused coffee. You know what I mean? Mm-hmm. Now, if you add the flavor after the coffee's made, but when it's infused at the bean level, it's not any good. But Buffalo Trace coffee, it's not. The bourbon is a lot better.
Publix makes a pecan
coffee
that's really good.
Yeah, that is good. Sorry to prank you. That was Cole's idea. Blame it on him. It was all his idea.
Thanks, Cole. Thanks for pranking me. Bradley, podcast today with just you and I, which are our most highly demanded podcast that we ever do.
Yep. Scott
and Bradley sit in here. We chop it up. We have lots and lots and lots of things that we need to talk about today. We have you're just coming back from paternity leave.
Yep.
I have
last time I'm ever going to do that.
Huh. Well, maybe. Depending on how things go Wednesday. What if they get in there and they go, "Hey, listen, man, you're like this 1 in a million patients that we can't do this operation to. So sorry, but you're going to have to."
It's still going. We'll break the rubber bands out.
We'll figure something out.
We'll get some rubber bands.
Yeah.
Glad
bags and go. No. Anyway,
I should live stream my vasectomy on the Insurance Guys channel.
Well, on last week's that is the best idea you've ever had, by the way.
I think it was Michael McCormick that live posted his colonoscopy.
Oh yeah.
So he's like posting on Facebook. It was hilarious.
Video?
No, just like words. Like,
Oh, okay.
they're doing this now. Like, it was and he's got such a unique sense of humor.
He does.
It was very funny. It was very funny.
Bradley, you just last week on a podcast that we were doing, you said that the month of June while you were out was the best month of selling insurance that you guys have had, most profitable month in the history of Portal Insurance. What is the secret sauce to your success? And by the way, you weren't here, so you can't say it's you.
It's the people.
Yeah.
You know. You know, we made a change. I don't think we've talked about this on the podcast. Okay. So, because the thing is, you and I do this so much, I forget what I've said and what I haven't, you know.
I do too.
So, and you do it so much, it's almost like it blends in with real life where I'm like, I remember saying that. I just don't remember if it's on the air.
Right.
So we made a change with our account managers. We have phenomenal account managers. This team we have right now is the best team I've ever had.
Are you doing the account managers one thing, CSRs another thing, or are you?
Right now, everybody's account manager.
Okay.
We don't have any CSRs. The way I look at it, CSRs are new to the agency. Right. Anyway, it's the best team we've ever had. Now we need more people, right? We're hiring for both awesome personal and commercial account managers, but it's something sort of clicked with me end of last year, beginning of this year, where I was like, hey, let me just break it down this way. So I'm a big believer in merit-based pay. You do well at your job, you make more money.
Right.
Very easy for salespeople. You sell this much, you get this. You sell this much, you get this, right? It's a little harder with CSRs, right? And from the beginning, I've always had my CSRs and account managers be commissioned mostly, right? I've had some along the way that maybe wanted a little bit higher salary, so they didn't have commission, right? And selling is part of being a good account manager.
Correct.
Okay. Now, there's a lot of account managers that argue with that. You're wrong, because part of being a good account manager is you are managing the account. You notice the people don't have an umbrella, or you notice we don't insure the second home, et cetera, et cetera.
Yeah, it's rounding out the account.
To you, it may not be selling. It may be a service function, but that is in the selling category. And so we've always had a commission, our CSRs and account managers be commissioned. And it sort of hit me, and I think it was somebody on the leadership team that said this. Beginning of this year, they were like, hey, look, here's where we're kind of setting them up for failure. Because if an account manager comes into work and they need extra money, they can focus on selling. But for them to really sell enough that it makes a big difference on their paycheck, they're actually ignoring all the other things that make them a good account manager. Right? The flip side of that, somebody who's doing a fantastic job at managing accounts may not have time to sell. So they make less. So you've got this scenario where people who are doing the best job are hypothetically making less money. You see what I'm getting at?
Yeah.
So we set out, I want to say in March or April of this year, I think it was March, we wanted to give our account managers KPIs that directly reflect what the goals are of the agency. And insurance agencies have two goals. Every other goal can be derived from one of these two goals. New business and retention. That's it. That's the two functions. Give me any other goal. Okay, EBITDA. Okay, that goes under both. Right? Account rounding. Everything can be derived. It's at the end of the day, we're selling new business and we're retaining business, right? So what we did is we came up with 4 to 5 KPIs for each account manager. They're interchangeable depending on their role. And we basically said, hey, commission's going away. You are it's a monthly bonus. There's a bonus pool every month. And the percentage of that bonus that you get is directly correlated with the percentage of your KPI that you hit. So if you hit 60% of your KPIs, you get 60% of the bonus every month. Sales is part of that. Sales is one of the KPIs, account rounding. And we're still tweaking it. It's not perfect. I think I'm going to get rid of a few KPIs and have it just be like 3 and make the bonus possibly a little bit bigger. But then also, in order for them to get the bonus, retention has to be at a certain point. So if retention is 89%, you're not getting the bonus. Does that make sense?
Sure, absolutely. Retention's a huge part of this.
It's called a retention gate, a bonus gate. In order to be eligible for the bonus, you have to do this. And then we also threw in a quarterly bonus on top of the monthly that is based on retention. So if retention is at 92%, every account manager gets $250. And for every 2 points above that, it's another $250 per account manager. The idea is I want everybody focusing on the same goal of new business and retention, right? Because I think it's easy sometimes for an account manager to view a customer leaving the agency as just a process, click, okay, done, versus like digging a little deeper and at the very least figuring out why that customer left, right? Not to mention trying to save the account. And so I think that's definitely part of it, is everybody kind of being aligned and focusing on this one thing. And the thing I love about the bonus versus the commission is it encompasses the whole job, not just one part of the job. So if I had to say anything outside of fantastic people, fantastic leadership team that held the fort down, Kenneth and Megan really stepped up, Natasha too. But Kenneth and Megan were, they were my eyes and ears. I think it would be that, making that change.
I'll tell you what I did. I have politely asked. I've prayed. I've screamed. I've yelled. I've cussed. I have done every possible thing I could think of to get my people to account round and cross-sell, because 28% of our home and auto business at iProtect Insurance was monoline. Okay? Now, for you younger agents listening to this right now, this is something that State Farm has known and has been part of their playbook and tattooed across their shoulder blades since they've been around. State Farm has always known and preached and done the very best job in our industry of realizing that the more policies an individual has with your agency, the longer they are going to stay with your agency. Now we're talking about retention, right?
Yep.
If you only have, you younger agents, if you only have one policy in your agency, okay, doesn't matter, auto, home, renters, but they've only got one policy. Your retention on that, and I'm being very generous, might be 2 years, okay? Might be, but probably only going to be a year, but might be 2 years. If you have 4 or 5 policies with that client, let's say they've got a home and an auto and a life insurance policy and an umbrella and RV and a boat and you're probably looking at a 7, 8, 9 year retention ratio. And that is where the money is made in insurance, not on the new business.
The money made in any business is customer lifetime value.
Correct.
Yeah. Yeah.
But I have prayed and I have asked and I have begged and I have pleaded. I went out and hired me a personal lines agent who has 5 years of experience with AAA. And I said, you know what you're going to do? And I double dog dare a damn insurance agent in my office to say one damn word to me about it.
Count round.
Yep.
Yeah.
And that's all he's doing.
Yeah. What's the strategy? What's the strategy? Just call him and say, "Hey, your name came across my desk."
He's got a couple of scripts that we've gone over and over and over that he has really over the past month dialed in, and not what you just said, but kind of that. Yeah. Hey, you've had your business with our agency. We noticed you didn't have your home or your auto. Blah 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 blah. and you can see the numbers start going down relative to the 28%, 27%, 26%
cancellation rate.
Yep. Yeah. And so that's been a big thing in the past month and a half in my agency is we're going to account round, because if we don't, your retention ratio is always going to be not great if you don't have that in your agency.
Yeah.
Now it may be a little different down here because all y'all are selling the same damn thing.
Not necessarily. Now we've had the same problem. And so this is what we've come up with. Mm-hmm. This is a new thing. When I say new thing, I mean Thursday we implemented this. So Megan, who is our service manager, came to me. She's like, look, we've been pushing the cross sales. And we do a lot of cross sales. That's been our number one source of new business the last 2 years. She said, they're asking. She said, I know they're asking. I hear them asking because her team's kind of around her. Here's the problem. We are short-staffed in the service department. Mm-hmm. They are so busy on the service side that they have the time to ask, mm-hmm. but they don't have the time to actually do it. Mm-hmm. So what we came up with is, so we have an inside sales team that's not commissioned. They are bonus based on how many policies they write, right? They are working their way up to being producers. When you're given a flat bonus versus commission, it opens up the versatility of what you can do. So what we did is we basically said, okay, account managers, you bring up the cross-sell in the service conversation and then pass it off to inside sales. Now, because account manager is bonused, not commissioned, inside sales is bonus, not commission, they can bring up the conversation, which honestly is the most valuable part bringing it up and closing it are the two most valuable parts in the sales transaction, right? So they bring it up, pass it off to inside sales quotes and closes it. Both are able to get credit. Mm. Now, what if it's a producer account, not a house account? Mm-hmm. Same deal. So it's a producer's account. Account manager brings it up, passes it to inside sales. Inside sales gets credit towards their bonus. Account manager gets credit towards their bonus. Producer gets the commission. Mm. So we're able to do all three.
Wow.
And the math works out. Now, this is new. I mean, literally, today is the third day.
But that producer is not getting their typical commission split on that. If you're having to bonus the other two,
it wouldn't be the same as correct.
Right.
But it's the way we track it. For those of you wondering, so for each account manager, we have a lead source that is Sally cross-sell. So the way that we do that is when the lead is assigned if it's a house account, when it's assigned to the inside sales.
What do you consider a house account?
Something that doesn't have a producer on it that works here. So like it could be something I wrote. It could be something somebody wrote that no longer works here. It could be an account we acquired.
What if let's say through your website, somebody fills out a online form and sends it in here and it goes to, I'm sure you have a way
that goes to inside sales, and that's a house account, but it goes to inside sales.
Wow. See, I pay all my producers. If they write new business, they get commission on it. But you're telling me that unless the producer goes out, kills it, brings it in,
which is the definition of a producer.
Well, then I don't have any producers.
Inside sales people. Some people blur those lines. Yeah.
So what about like a mortgage lender here in town that you've built a relationship? They're sending y'all business.
Yeah.
Producer writes it. They don't get paid commission on that?
It depends.
Wow.
Let me back up. Now, if the lead gets sent directly to the producer, so like let's say it's a mortgage lender relationship that I have built, that the agency has, but that mortgage lender refers directly to a producer, that's not a house account. It's going directly. If it goes directly to that producer.
But you must be making up for that in salary or something, or they wouldn't be working here.
For sure. Yeah. Absolutely.
You know what I'm saying?
Yeah,
'Cause
absolutely.
they'd be making a Snickers bar and a pack of crackers.
So, but that's like if you look at any big agency, the producer, it's the definition of a produce. They produce it.
Mm-hmm.
You know what I mean? The reason we made that change is we get a lot of online leads, and they were not able to get to all of them. And I'm like, okay, well, if you're not able to get to all of them, we're not writing them anyway.
Mm-hmm.
You know what I mean? So the inside sales team gets those. But back to what I was saying. So the account manager brings up the cross sell, assigns it to inside sales as the producer, and puts Sally cross sells the lead source. That way we can track both.
Mm-hmm.
The way we do it if the producer's involved is they assign it to the producer, put the inside salesperson as the CSR in agency Zoom, and then their name cross sell. So that's the way we're able to track all of that, just to make sure they get credit. But that's something new we've done to see, because it's like
for a week.
Yeah, because like more than half the battle is bringing up the conversation.
Mm-hmm.
You know what I mean?
Mm-hmm.
And so the next phase that we're probably going to do at some point is basically tell the account managers, like, hey, in every single service conversation you have, unless it's like a claim or something's really bad wrong, you bring up that cross. There's some kind of line of business they don't have that you can bring up, and track it that way, and basically say, hey, like, you got to have 90% of your conversations you have to bring up a cross sell. And so, but that's been a struggle for us, man, because we've always had a big monoline book. Now we've whittled it down, but we've got, man, I think at the beginning of this year we had like 2,800 monoline accounts out of 7,000 accounts.
Yeah,
so
but that was
opportunity.
because you guys get a lot of mortgage lender referral, and that you're trying to write the home.
It was that. So it's three things. It's that.
Yep.
It is the nature of where we are in the state.
Yeah.
Because none of my home carriers write auto, and none of my auto carriers write home.
Right.
And it was the agencies we've acquired.
We're the same way.
Mm-hmm.
Yeah.
Yeah. Which, again, I look at that as a good thing. Like, it's a huge opportunity.
Yeah.
If you just do the math, our average close rate 60% on a cross sell.
Damn.
If you 2,800 accounts times 60% times the average auto premium, it's a lot of premium.
Well, that's where you pick up a lot of lift from those agencies you bought, because if
100%.
you said earlier, like the last couple of years, we made most of ours off cross sell. It's probably cross selling those books
100%.
that were just a mono line at, this, and now they're.
It's that, and I'll tell you where we have made up a huge, like, our part of that profitable month, and we're ahead of schedule this year EBITDA wise. And for any of my people listening to this, Bradley's not Scrooge McDucking it. All that money's going back into the business. Is some book rolls.
He's making the assumption. Never mind. I was going to say my people. I can say whatever I want to. Remember the time I did the 250 if you bring it up and nobody brought it up?
Yeah. I have people that listen to it. So we've strategically book rolled to some carriers that pay more. We also have negotiated with a lot of our carriers on higher commissions. The market is soft enough that you can do that. So we've got one carrier in particular. There's going to be a $70,000 commission lift this year versus last year, just on that one carrier's book.
Wow.
Now, most of the business that's through that carrier was written by a producer, so a certain percentage of that's going to the producers, which is nothing makes me happier. But there's opportunities like that, and that's really, I think, when you get to a certain point, Scott, and you know this, you were doing this way before me. When you get to a certain point, there's little things you can tweak without really changing your business model that get more blood out of the turnip.
Mm-hmm.
You know what I mean?
Mm-hmm.
Things like, moving your financing over to Ascend, which does two things. You're more efficient, and then also Ascend has the take rate feature in most states where, I get a percentage of the APR on what's financed. Mm-hmm. You know what I mean? So I think that's kind of me and Carrie have done a lot of that in the last 6 months of like looking like, okay, what are some levers we can pull within the business to generate more revenue?
I'll tell you one thing that you've always had that I've always been jealous of you having.
800 kids?
No, that's no. Having an agency manager, like a true agency manager that runs your agency. Like I've never had that. I've never had that person
Between Kenneth and Megan, Kenneth is more on the operations /tech/HR process side, and then Megan's more on like the actual insurance side. But between those two, man, and Natasha does a great job as well. She's sort of, her role's changing a little bit.
But I kind of feel like you have to get a guy like Kenneth that's not involved in the day-to-day like sales or service because you can easily get bogged down in that stuff. Like Kaylin Weston in my agency, no chance she'll listen to this, but she would be a phenomenal agency manager, but she's from a time standpoint, she just doesn't have time to do that and be a senior level commercial, account manager. She just can't do that.
Yeah, I think it's important at a certain point to have that person that's kind of a second set of eyes, and their skill set is the opposite of what yours is.
And they need to be operations driven.
Yeah. Kenneth and I have actually thrown, because we have Mind Your Agency with Kenneth.
Yeah.
We've actually thrown the idea out of adding an additional product offering with Mind Your Agency that's basically Kenneth as a fractional COO for agencies. To basically say, hey, Kenneth's only going to work with 5 agencies.
Right.
And it's got to be within a certain, whatever. Because the issue we've ran into.
That's a fantastic. And then for somebody that needs that, hey, that's a fantastic idea.
The issue we've ran into with Mind Your Agency is we've had agencies reach out to us and say, hey, I want you to build us a custom intranet. We're like, okay, cool. And then like, okay, well, send us your SOPs. They're like, oh, we don't have any.
They're like, Scott, they don't have any.
So we've thought about going one of 3 areas with that. One is licensing portals SOPs, which isn't going to work because it's so like custom built towards E&S and coastal. 2 was doing a course teaching people how to build the intranet on their own at a low cost, which we did do. It's still out there. And then 3 was just, hey, let's go the fractional route for the people that are like, hey, we know we have this problem. We want to spend money to solve it and sort of, do that, pimp Kenneth out, so to speak. That'll be the title of the episode. But
pimping Kenneth out.
We've thought about doing that, and I had no intention to bring this up. If anybody's listening to this and you're interested,
no, I'm the one that brought it because I brought it up because I said I've always been jealous of you having a kind of an operations person.
Yeah, well,
that I don't have.
If you're interested in that, like, reach out. You can reach out on the Mind Your Agency side, or you can reach out to me directly. I wonder testing the market to see
how much time could he dedicate per agency to still have enough time to see about what y'all are doing.
I don't know.
Have to ask him that question.
Yeah, I mean, I think if you kept the client size to 5, which you'd have to charge a good bit for, be cheaper than what you could hire somebody at that role though for. I think he could spend quite a bit of time.
So here's the question of the day, and then we'll get off this podcast.
And the other piece is too, once you have a really good COO and they've like really laid that groundwork, you don't need them quite as much.
Correct.
You know what I mean?
Yeah. I was thinking it would be almost like he's a fractional COO for it. Well, part of this would be highly dependent on the size of the agency.
For sure.
You know what I'm saying? Like the bigger the agency, the more work is probably going to need to be done.
Yeah, it's probably the ideal size would be like 5 employees to 15, somewhere in that range. Cost wise would not be cheap, but it would be significantly less than it would be to hire somebody, and then you'd get all the Mind Your Agency stuff for free.
Yeah. So here was my question of the day that I thought of on my way down here yesterday. Are you ready?
I am.
I don't know what your opinion's going to be. I sent this to Bradley late yesterday afternoon, and I said, I want you to give this some thought. Every single industry in the United States of America since COVID has raised prices, or if they haven't raised prices, and I'm using like stuff at the grocery store where they've cut the size of the box or the bag down. They're putting less of what they make in the bag, but they're charging the same price. And prices don't seem to be going down. We've been in an inflationary mode for a long time. And for the last couple of years, insurance was in a hard market, and it was going up, and everybody hated insurance, and insurance is terrible. But now we're seeing, in a lot of cases, like a race to the bottom in insurance. And I got to thinking about this on the way down here, and I thought, is gas and oil and insurance the only two, let me qualify that, P&C insurance, because health insurance don't seem to be going down anytime soon. Gas and oil and P&C, property and casualty insurance, are those the last two vestiges of industries in the United States that are cyclical? There's the third one I left out, the airline industry. But the airline industry seems to be cyclical based on timing of buying a ticket.
Here's the thing, though. The insurance industry is cyclical. It's always going to be cyclical. And I don't have any stats on this, but I would argue that because we're right now where I'm located in the country, I feel like at the softest of the soft market. Rates are still higher today than they were in 2019. So I think it is cyclical. I think the chart's going up and down, but overall it's like a stock chart. It's still going to go correct. Yeah.
The only thing I wouldn't agree with you on that about is commercial property.
True. I'm thinking through a personal
floor.
I know. Yeah. Yeah. We've actually got a regional carrier that's launching a commercial property that they're being very selective with who they're like. We're one of a few that got it, and I just cannot wait. That it's going to be a bloodbath. We're going to write so much business anyway, and they're paying 18% renewals.
Damn.
Yeah. So, but you're right. But I still think overall, especially with building, cost of construction, cars. If you look at car insurance, like there's more. Like, I knocked that mirror off my wife's car. The mirror itself cost $2,500. We found out a couple weeks ago I needed a whole new door because the plate that's welded to the door the mirror is attached to is bent millimeters. That door's $4,500, $10,000 door. You know what I mean? I don't know. I don't know that I totally agree in the sense that it's a race to the bottom in terms of rate, but it may very well be one of the last industries that is cyclical for sure. Well, at a pronounced where you can notice it. Like the price of milk is cyclical, but it's small variations.
Yeah.
Like insurance may be insurance and oil may be two of the last industries that it's wild swings. You know what I mean?
No, I think the more I think about it, the more I think you're right about home and auto. Home and auto seems to go up and down a little bit.
Yeah.
But overall, if you look at it kind of like you look at a stock on the internet over the week versus day versus year versus 5 versus 10 year, I think you're right. I think it does this.
Yeah.
And I think part of that reason that it continues to increase year over year is for things like what you just said about your car, like the repair cost to repair a XYZ car continues to go up.
But it scares me. It really does scare me because insurance in certain states has gotten so politicized. And I've often said that the day the government gets involved in property and casualty, like they did in health insurance, I'm probably out. At that point, Bradley's a full-time podcaster, and I'm probably going to go like full Andy Frisella and just start yelling at everybody.
Right.
And it's gotten so politicized. And I do think the state association and the insure packs are much stronger and have more leverage in P&C than they did health insurance. Because health insurance is different because like I remember when I was at Alpha and I was selling life insurance, if I had to call somebody and tell them their house was not insurable versus calling somebody and telling them their body is uninsurable, those are two complete, you know what I mean? Health insurance is more personal, but it's scary because also, we talked about this with Stacey Korsgaden, the solution in insurance to get your rates down is often the opposite of what the consumer thinks it is.
Right.
So Thursday of last week, I did an interview with NerdWallet. So NerdWallet,
I've heard of NerdWallet.
Yeah, they reached out to me through the Big I. They wanted an expert, air quotes, to talk about high-risk auto clients and what they could do to get their rates down. So anytime I get asked to do something like that media-wise, it's great for SEO, so I do it. Now, pro tip to you guys listening, anytime you do any kind of media, even local media, always record on my side too. That way, if that reporter takes your words out of context, you can be like, no, this is what I said. But I did this interview with this guy, and it was about people. It wasn't necessarily about people who were like, DUIs and like, people who wreck cars all the time, but like maybe the business professional that got a .08 DUI or got in a couple accidents or as a teenage driver, what could they do? And one of the things that I gave him is I said, look, a lot of times consumers think that, oh, my insurance rates are high. I'm going to shop my insurance every 6 months and I'm going to change every 6 months. And I would argue that the person who only changes every 2 years or so over time is going to pay less than the person that swaps every 6 months to save $2. I mean, because you're getting labeled as a shopper, right? What's another example? I'm going to carry state minimum limits. It's the cheapest, right? Liability aside, when you go to another carrier, when you go to Safeco, what are they looking at? They're looking at what's the prior liability limits and how long they've been with that carrier.
And that's a knock against you if you got limits.
And this was like a financial guy at NerdWallet, and I could see him kind of like, oh. And by the way, Safeco, and I didn't mention y'all's name, but he was like, oh, interesting. Like, it's always the opposite. So that being said, when and if the government gets involved in P&C, they're just going to screw it up royally because they're going to do what, because they're all trying to get reelected. They're going to do what appeals to consumers. And 90% of the stuff that consumers think is a solution as it relates to insurance is going to cause rates to go up. Bottom line, And so, I don't know. It's just as scary.
Here's one for you agents out there that I've really dialed into the last couple of weeks because I'm the most expensive account manager in the United States. That might be what
gets me to run for office.
Oh shit!
Anyway,
one thing I have found out, and I've always instinctively known this, and I think I knew it from my insurance textbooks and training that I've had over the years, but I have really noticed it the last 3 weeks. If you are in a household, and I'm talking all of these carriers like Travelers, Liberty Mutual, all these auto carriers, and you have like 4 drivers and 2 cars, buddy, they will stick it to your ass. These carriers do not like having fewer vehicles and more drivers in a household. I'll give you an example. My stepdaughter, Avery, moved out of our house and moved to an apartment in Madison last year. Well, it's time for her to be a big girl and get her own insurance.
Did she buy it from you?
Yes.
Okay.
Through Progressive. One of my CSRs, my new agent took her off my insurance policy. My auto policy, right?
Right.
Took her car off my policy. Comes into my office last week and he goes, hey, I took Avery off your policy. It took your premium down this much. I can't remember how much it was. And I looked at him and I said, have you lost your damn mind? He goes, what? And I said, it should have been a lot more than that it would have taken off my policy. He goes back and looks. He took her vehicle off my policy. He did not remove her from my household, so she's still listed as a driver. Now there's this uneven match of drivers, and I think it ended up saving me $700 a year to take her out of my household, which she needed to be taken out of my household. But I'm just telling all you agents out there, you need to get with your staff and you need to let them know, hey, when you take a vehicle off a policy, you might want to check and make sure that somebody that's listed as a driver doesn't also need to be removed. Because when you leave that 23-year-old as a driver in your house, that's gonna be a problem.
Yeah, that account audit is very important.
Absolutely, it is.
And that's like a good example of like a good account manager, man. There's this like matrix in their head of like, I remember my buddy John Jay described it that way. I was like, you hit the nail on the head. Like there's a matrix in their head of like, they know if this happens, that triggers a chain of events of other stuff. And it's hard to train that. Like I'll give you another one on the commercial side, or E&S side even. Somebody wants to cancel the policy. You cancel the policy. What else do you have to do? Cancel the premium finance agreement. You got to cancel both. Just because you cancel one doesn't mean. Right. And we've had that happen before where we cancel somebody's policy and then the premium finance kept going. Now, obviously, they got their money back. Right. But there's like stuff like that it's like, that's why it's so hard. Like my wife who runs a State Farm agency, she's very adamant she does not hire people with experience. I really only want to hire people with experience. For me to hire you without experience, you have to be super motivated. And because it's like, it's so hard to teach that.
You know what I had about an $80 million agent tell me one time?
What?
He looked me dead in my face. He said, Scott, I'm going to tell you about hiring people. If it's personal lines, hire experience. If it's commercial lines, don't hire experience.
I agree with that. I agree with that 100%.
He was only about $80 million agents.
I agree with that because on commercial, what really matters the most is understanding like business.
Correct.
And understanding revenue and payroll and what an EIN is and all that kind of stuff. But on personal
being able to talk business with a business person, right?
Yeah, well, because too, like most of the time on commercial, you're dealing with a lower volume of transactions.
All right.
So you have time in between the conversation and the thing you said you're going to deliver to figure out what the deal was.
Correct.
You know what I mean? I'll tell you what I did one time, dude. I was working at one of these companies I worked at, right? I called this customer to cross-sell something, and I'm just like going down the repertoire of products, and I mentioned long-term care. Actually, you know what? I've been interested in possibly buying some long-term care. We set an appointment, like 2 days. So I spent that day, and when he came in, learning everything I could about long-term care.
I'll be damned.
About 20 minutes before he gets there, I tell my boss, I'm like, hey, I mentioned long-term care. He's like, Bradley, did you know you have to have a specific type of license to sell long-term care insurance? So the boss ended up doing the appointment. We wrote the account, actually. It got declined. But I think with commercial, you have time to if you understand business, you can figure out how to fill in a quote out. You know what I mean? I agree with that. But personalized is tough, man. Especially if you do volume. Like, man, we've had folks struggle here because they come here and they're not used to the volume, and volume exposes weaknesses.
They do.
And so we've gotten really real with people on the front end with finding out what their actual experience level was.
Right.
You know, we've implemented an assessment that we created. It's a long form answer assessment with like insurance scenarios. And we tell them there's no right or wrong answer. We're going to use this to train you. and it tells us like what they know, you know.
Have you not hired somebody after you took it? They took it?
No. What I have had happen though was the next thing we implemented. This is for the person that we want to hire, but we are not sure if they're set in their ways or not. We do that, and then we bring them in for a half day of job shadowing. Now I have to trust them, but we will bring them in for a half day of job shadowing where they shadow the person who's doing the job they're going to do. The majority of the folks.
That's strong, dude.
The majority of the folks the first guy we did that with came in my office after he did it. He said, I can't do this.
Yeah.
I can't. So and I'm like, hey, dude, that's like, I'd rather you tell me now
100%.
than you quit your job. Right. You got 3 kids. You come here and I'm like, crap, I'm overpaying this person and they don't know how to work a Mac.
Can I ask a question?
Yeah, and then we gotta roll out
because I've never done job shadowing before. How do they job shadow? Do they literally sit in a chair in the corner of the office and just watch? Mm-hmm. How long do you make them do it? Like how many hours? Like 2 or 3 hours?
4.5 hours.
They
half a day. Yeah,
and they can ask questions and stuff.
Yeah, I want the person that's doing to give the narrative.
Do your people push back to that a little bit? Like, dude, I don't want some dude in my office for 4.5 hours.
No. No, I mean, usually it's the attitude. I mean, they know that, like, hey, if we hire this person, it could be good for us.
Yeah.
You know? But it's a good way, you know, because, like, the job candidate that scares the crap out of me the most.
Could they do it over Zoom?
Yeah. The job candidate that scares the crap out of me the most is the person that's been at the same agency for 27 years. Because somewhere around year 8, you get real set in your ways. And I want to make sure they're not a old dog that can't learn new tricks. You know? And the thing is, I mean, you gotta be able to trust them. You know, if they're a competitor, you know, it gets kind of weird. But adding both of those 2 things have prevented me from making some hires that, not going to say we couldn't have worked it out, but would not have been. It's like the thing is, dude, it's like the last thing I want to do is hire somebody and it not work out. Like, I'd rather
100%.
just not hire. Like, I had to let somebody go last week. Totally justifiable situation. And I'm like, I would have rather just not hired you.
Yeah.
You know, like if we could have somehow figured that. And at the end of the day,
how long were they here?
6 months.
Okay. That's not terrible.
No, I mean, interviewing at competitors.
Were they good at what they did?
Decent. Interviewing competitors. Was upfront about it. I was out as well. I was out. I told Kenneth first thing. I said, okay, now this is somebody I trust, not to steal clients or whatever. I said, okay. Because generally, rule of thumb is, you're interviewing with a competitor, you're out of here, right? I told Kenneth, okay, go see what we can do to keep them. What can we, you know? And I think the main gripe was drive time, which I can't do anything about.
Sure.
Too close to work remote.
What's drive time? An hour?
It just depends. Going across that Bayway, just depends.
Oh, okay.
It's more traffic than drive time.
Yeah.
But then I found out this person was complaining to other people and telling other people that they were leaving.
Oh, about drive time, or
no?
Just
telling other people that I don't like it here. I'm interviewing with competitors.
Oh, okay.
And that's the thing that's okay. You got to go.
Yeah.
Like, I can't have you. I'm willing to work with you if you're not happy here. By all means, by God, if I'm not going to prevent you from doing what's best for your family, but if you're gonna, you know, it's like they took like doing that to current people who are happy on your way out the door is like,
it's cancer.
What you're doing is you're stopping at my house unannounced. You're asking if you can use my bathroom. And on your way out the door, you rub poo on my walls.
Right.
That's what you're doing.
Yeah.
You know what I mean?
Yeah.
And so at that point, I'm like, I just got to get you out of here. You know? So anyway, that's what happened.
Did they pick up shit and throw it when you told them? Or were you just like, hey, look, this isn't working. You're going to need to go?
I'm going to leave that unanswered, but I will tell you they did exactly what Claude told me they would do.
All right. Well, guys, as I end every episode, rewards come from action, not discussion. Get your ass out from behind that desk today. Go out into the big bad world. Make money for your family, for your wife, for your husband, for your kids' college fund, and your parents and in-laws like mine that are struggling out there. Go make money for them. Write good business for the agencies that you represent, and write good business for the carriers that you represent. Bradley Flowers, I
Thanks,
love you.
buddy.
Guys, you are listening to the Insurance Guys podcast, and we love each one of you. Thank you so much for listening to our show, and we'll see you back here real soon. Take care.